Now, we recently had a lot of bullish commentary in regards to Tesla stock that's rallying up a lot of the Uber Tesla bulls, and I wanted to go ahead and share it with you guys so that you guys could hear for yourselves what was recently said. So we had this very recent interview at CNBC with Dan Ives, which, if you don't know, he's the senior research equity analyst over at Wedbush, and he had a lot of great things to say with Tesla, but I'm gonna go ahead and play this clip and then afterwards share my perspective on various different topics in regards to Tesla stock. And of course, you guys are free to comment down below what your thoughts are as well, because there's a couple of things that I don't necessarily agree with that a lot of people may be upset about, but there's some positives in here as well. And so let's go ahead and toggle over to this interview from CNBC.
Joining me now to make his case, Wedbush Securities Managing Director Dan Ives. Just like, you know, we talk about these big pay packages, it's like $1 billion, and it really is that. But to the point, if robo-taxi is the next big thing, do you think that this is the man who can lead Tesla to the future? And does robo-taxi, is that the thing that's going to make Tesla regain its $1 trillion market cap?
Musk is Tesla, Tesla is Musk. And I think ultimately, right now, Tesla is the most undervalued AI play in the market. I mean, I believe the AI component of Tesla could be worth 1 to 2 trillion alone. And this, in my view, this is really the beginning of what is going to be just a massive stage of growth for Musk and Tesla. August 8th, in my opinion, will be a historical day for Tesla.
Okay, they unveil it August 8th. Any idea when production starts, when we would actually see robo-taxis on the road?
Look, I think over the next 18 months, I mean, this is something, we're not talking 3-4 years away. I think this is the start of what's going to be not just robo-taxis, but when you talk about full self-driving and autonomous, Tesla is an autonomous AI company. It does disruptive tech. And I think we will be looking at ultimately a stock that could potentially double over the next 12, 18 months.
We have a headline today from CNBC.com's Laura Kadlodny. According to internal memos, Tesla's workforce has shrunk by 14% since Elon Musk announced layoffs back in April. In December, Tesla employed a little more than 140,000 people worldwide. Today, it's 121,000. What do the layoffs mean to you in terms of resources aimed at growth and cost efficiency?
Yeah, look, they've had to rip the Band-Aid off because we've seen softer demand globally, especially in China. That's the hearts and lungs of the Tesla story. But I think they have been proactive. And even though we're not expecting fireworks for the June quarter, this will pay dividends. It's what Musk and Tesla have needed to do. An adult needed to be in the room, and Musk stepped up. And I believe right now, when we look at the Tesla story, they've gone through some Category 5 hurricane. But I think on the other side of this now is going to be that Cinderella story will return to Tesla, and I think AI is going to be the key.
You know, there was a lot of hype over Cybertruck when the launch happened, when it rolled out off of the production floor. Do you think expectations and the hype around Tesla itself make the rollout of robo-taxi problematic?
I think you're going to have a brighter spotlight like we see with Musk and Tesla. But from a core technology perspective, I believe this is really going to be the start of what's going to be a renaissance of growth for Tesla, not just on autonomous, but even on a demand perspective.
Meanwhile, you've got like Ferrari moving into the EV space. The company's offering a posh new electric vehicle sports car that comes at a price tag of, I'm going to choke on this too, $500,000, set to be released next year. CNBC's Robert Frank sat down with Ferrari CEO Benedetto Vigna and says, well, here's what he said about the car and the demand for EVs.
You know, the final judge will be the client, but I can tell you that several people, more people start to see, to try our electric Ferrari, and they have a good feeling. I believe that in the future, we will have clients that today are buying our cars, that they will switch to electric.
Will they?
I think they will. And I think what this does, when you have a brand like Ferrari making a bet like this, it shows where the world's heading. And I think they're hedging their bets In my opinion, Ferrari, it's the gold standard. And this is an important, something that a few years ago, never thought that you'd see this headline.
Okay, so starting off from the obvious, in regards to Ferrari now kind of transitioning in and kind of dipping their toes in the water towards, producing and manufacturing these EV vehicles, that's absolutely a bullish indicator for Tesla in the future, as we know that the trend of EVs is going to continue to grow. And I know there's a lot of media outlets out there that say, look, EVs are dead, they're not going to happen. But we know that there's government intervention to go ahead and make EVs happen, not only in the United States, but globally, right? We're seeing this trend go globally, and we're likely to see this continue. And so a lot of the individuals who were against EVs in the past, they're likely to eventually change their opinions in the future as we see the progress of EVs and the evolution of them, right? When EVs first came out, there were a lot of individuals, including myself, who said, look, this was garbage. And it wasn't until Tesla kind of actually made a lot of modifications that made EVs actually, tolerable. And we're still seeing a lot of improvements. And so this, conversation of Ferrari, right, who's a very prominent, notable car brand, especially for, these super cars that, are very fast transitioning, right, to EVs. We also had Bugatti just a couple of weeks ago announce a new EV Bugatti. We're going to continue to see this trend. And so this is obviously a bullish sign for Tesla. But I want to go ahead and toggle over to something that a lot of individuals may not agree with. And again, this is just my personal belief in regards to Tesla and the things that I see, which again, we're going to go ahead and also talk about Tesla from a technical perspective as well, as I know a lot of individuals like to look at the charts, but let's actually focus on the actual business, right? The fundamentals, which actually matter. Now, in this interview, Dan Ives mentions how Tesla is this undervalued, massive AI play. And while that may be the truth in the future, right now, I kind of disagree with the idea that Tesla is an AI company. And I wanted to go ahead and share with some of the numbers that we see from the actual fundamentals. And don't worry, I'm not going to show you the numbers. I already, converted it to charts, nice, pretty visualizations. And you're going to see right over here, Tesla's revenue growth over the last few quarters split between its different segments. And so what we see here is that total automotive revenues still make up a majority of Tesla's revenues, with services and other revenues and energy being such a minuscule amount. But to further explain what I'm saying, if we take a look at Tesla quarter over quarter percentage change in revenue growth, what you're gonna see is, notice how Q1 of 2024, this big blue bar drops down, right? That's the automotive revenue growth. And notice how when the automotive revenue growth is down, well, the yellow bar being the total revenue growth is down as well. And that's because a majority of Tesla's business is its vehicle sales. And so, of course, if its vehicle sales are going down, well, the actual company is going to start to trend down as well, because guess what? Tesla is a vehicle company. Now, if you were to say, look, it's an AI company and AI is the main driver of what the company actually does, that would be a different story. And perhaps that may be what is the truth in the future, but currently we can't just be oblivious and say, look, Tesla is an AI company, it's severely undervalued, when we aren't really seeing the true ramifications of what Tesla could potentially do with its AI business, as it's not there yet. We can't see what Tesla's gonna do with their AI segments, as it's not even a large portion of their business. Perhaps in the future it could grow, and fingers crossed, right? I'm optimistic. Actually, I'm more optimistic about the robotic segments of Tesla. That's actually where I kind of am more focused on, but that's a completely different story. The point is that when we look at the actual fundamentals, right? And this is not me playing with the numbers. You could look at the, quarterly reports, look at the actual earnings reports, look at the statement of operations, and what you're going to see is that Tesla is currently a car company. And so right now, one of the reasons why back in December 28th, I said we were going to see a lot of challenges in regards to Tesla was simply because we're in this horrible macroeconomic environment where it's very unaffordable to finance a new vehicle. Yes, Tesla has been dropping their prices, and that's great to stir up demand. They're doing things that are proactive. It hurts the company now, but it's kind of good in this thriving or in this declining environment for them to thrive, right? But the problem is because it's so unaffordable to finance a new car, well, that's going to hurt the business model because, again, Tesla is not an AI business, it's a vehicle business at this current point in time. Fingers crossed that Optimus and AI plays actually, come true and change the overall business aspect of Tesla, but that's not the case right now. So it's very difficult to say that it's undervalued when it's really not even there yet. But again, I know I always get crucified when I say this, especially when I talk negative about Tesla, but I want to go ahead and touch on something that I find a bit kind of conflicting, and this is what I'll have to say. So when you look at these analysts like Dan Ives, or if you even look at fund managers like Cathie Woods, they're oftentimes talking their book, right? And that's kind of like when you have this incentive to go on these media platforms like Yahoo Finance, CNBC, Bloomberg, whatever place they go to, they oftentimes throw these absurd numbers for Tesla, and it's to kind of do this promotional, it's to kind of just stir up interest, right? It's to kind of have people buy up Tesla because, of course, it helps them. Cathie Wood is a fund manager. She has a large position in Tesla. Of course, she's going to say Tesla's going to go to the moon when that is her biggest position. And Dan Ives, you may say, okay, he's not a fund manager. He's, we don't know if he has any position in Tesla, but he's an analyst who sells his information to fund managers and other, funds. And of course, if he's telling people that Tesla's going to do well and Tesla's not doing well, he has to do this kind of media tour and go everywhere and kind of say, look, Tesla's going to do well. So that's the thing that you often see with these market pundits. Oftentimes, they're just talking up their book, and some of what they're saying has some merit, but they're oftentimes kind of doing this like hyperbolous kind of speaking where they're saying things are going to be absurdly much higher than what the reality is likely to be. And that's something I want everyone to be mindful of. Now, another thing that is concerning is the fact that they've been kind of wrong. In fact, if we take a look at Cathie Wood, year to date, she's down 14%. But if you take a look at the S&P 500, the S&P 500 is up 15%. So Cathie Wood is underperforming the broader markets by a significant amount. She could have just, bought just any other company, but because she's big on Tesla and Tesla hasn't been doing very well, of course she's gonna go and on this like media tour and say a bunch of great stuff for Tesla to kind of stir up and talk up her book. Same thing with Dan Ives. And so I want everyone to be aware of when you hear these, market pundits say a lot of positive things in regards to Tesla, you need to be a bit skeptical of what their underlying position is. Now, of course, I do have a position in Tesla as well, and so you guys should be skeptical about me, but even so, I don't kind of spew out this like nonsense of, look, it's going to go to the moon. I kind of share negative commentary around Tesla because I'm just trying to share this unbiased opinion of what I see going on. And that's why I haven't been buying a lot of Tesla, right? If you're within the Push and Profit Private Group, we've been talking about a lot of other names that have been running up besides Tesla. So, I want everyone to be mindful of that. Now, going on to a different topic, they start talking about pretty much what Tesla is looking like with the workforce declining, or the layoffs in Tesla. And look, I'm not for layoffs. I think it's horrible. It sucks that people lose their jobs. But what he mentioned, that Elon Musk is kind of doing the grown man thing to do, is kind of true, right? And I know, I don't want to be the guy that says people should get fired. I don't want no one to lose their job. Of course, I want people to be able to provide for their families, and especially those individuals working hard at Tesla. But it's very prudent for a company to go ahead and trim on their workforce, especially if the company isn't doing very well. And I want you guys to take a look at this right over here. And that's when you look at the SG&A expenses, and that's pretty much just the operating expenses, the selling, the general, and administrative. And what you see here is that Tesla kind of needed to trim a little bit of their workforce when their SG&A expenses are climbing up, but the company's revenues are actually underperforming. And so it's prudent to actually cut down on the workforce. It's important to kind of balance cost-cutting measures with potential impacts, going on with the company. I know there's employee morale and the company's ability to generate future revenue, but strategic cuts that focus on non-essential expenses while preserving core capabilities can help the company weather a downturn. And so, again, I'm not for people losing their jobs, but what I agree with what Dan Ives said here, that this was kind of like a necessary, right? One of those things where it's kind of like you have to do it. I know there's a specific term for that. I can't even think about it, but it's kind of one of those unfortunate necessities where, yeah, it kind of sucks. It does bring down morale, but it's kind of necessary to weather this storm. We're in a bad macroeconomic environment, and it's likely to get worse, especially with the Federal Reserve kind of delaying on these rate cuts, right? With the Federal Reserve delaying on these rate cuts, they're going to be late to the party, just like they were late to the party in hiking rates. Just like when they said inflation was transitory and then they went back and say, oopsie, well, okay, we were wrong. They're likely to, do the same thing again and be late once again. Canada, the Bank of Canada has been ahead of the curve. And we saw Canada be the first ones to hike, they're the first ones to cut. And once again, the Fed is going to be late to the party. But what does that mean? That means it's going to be a lot challenging for companies like Tesla, which are very interest rate sensitive because they're a car company that needs people to finance to buy their vehicles. And so ultimately, there was a lot of bullish stuff said here by Dan Ives that I do agree with, especially like the points of even Ferrari seeing that the EV trend is going to continue and how it's prudent for Tesla to cut down and trim down on its workforce at this time in this economic cycle. But I do believe that he may be a bit too optimistic talking up the book, especially with the plays on AI and how Tesla's an AI company that's undervalued. I don't necessarily agree with that, especially as there's a lot of regulatory issues with FSD and a lot of red tape that's going to be coming. But with that said, still a lot of positives. And so I want to go ahead and hop into my laptop and now take a look at Tesla stock from a technical perspective. As I often share in this channel, that you want to have a multi-dimensional approach when you're evaluating equities and the risks along with them. And so I want to go ahead and kind of share why we may be in a bit of a positive moment for Tesla. But before we do so, just a friendly reminder that if you have not done so already by this time, make sure to tap that subscribe button so that you don't miss out on any future uploads. And also, make sure to hit that like button. Only 20% of people who watch videos on YouTube hit that like button, and hitting that like button does help out. So if you made it this far, make sure to hit that. And let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla from a technical perspective. And one thing that I've talked about in previous videos is that there was a lot of sideways action with Tesla, and this was likely to take place as we see there's a lot of volume relative to price, which means that, there's a lot of trading activity between the buyers and the sellers taking place right around these prices. And so that creates consolidation. However, one of the things I've said in previous videos is that we're likely to break out, and if we do, we have this open area of very little volume relative to pocket. This is called a volume pocket, and if there's buying pressure as we are in this volume pocket, well, that could help us exceed and start to push upwards to like the mid 200s, which would be great for Tesla. Now, if we take a look at, I don't like drawing too much on the chart. I hate the squigglies, but sometimes the squigglies are there for a reason, right? For example, I've talked about in the past how we have this long descending trend line for Tesla that is yet to break out of. And that's why back in December 28th, I made a video on December 28th, and I made several videos saying that Tesla was going to fall down. Part of it was a technical reason that we were going to reject from this trend line, as it's been a strong trend line for a while and likely to reject once again. But in combination with the macro cycle and the fundamentals, we were likely to see Tesla fall down, and that's where we're at. But now, zooming in, going to like a daily time frame, one thing that I have here is these two rectangles. These are buy zones, supply zones, and demand zones, right? Or rather, this is demand zone and supply zones. And what we see here is that we're kind of teetering at the top red rectangle, which is a supply zone. And so if we break out of this supply zone, that's going to be great news for Tesla again, right? This is kind of just think of this as a resistance area, and then think of this as little volume relative to price, where if we break out of this resistance area, we have the range to start to climb upwards. And that's why when we were coming down at this area with little volume relative to price, it was like basically taking the elevators down, right? It was just kind of just falling down. Then we came right over here. We kind of traded sideways a bit where there's lots of volume relative to price. And then we broke below it. And guess what? Below the shelf, little volume relative to price. So if there's selling pressure, it goes down. If there's buying pressure, it goes up fairly quickly. Now, we're at this interesting moment where Tesla looks like it's about to break from this resistance, head into this area of little volume relative to price, and push upwards. That's why I have this bell icon. I don't know if you guys could see it, where I put an alert for the swing trading account where I'm looking to buy some Tesla in the swing trading account. Now, I want to specify I do have a trading account and then a long-term investing portfolio. In the long-term investing portfolio, I haven't been doing much for Tesla. As Tesla was falling down, I wasn't buying, and I know people were like, "Oh, you're stupid for not buying. You know, you should buy Tesla." The last time I bought Tesla in the long-term portfolio was after the earnings. It was around April 23rd. So if we look at it, it's kind of like right around over here. So I did average down. I bought more shares, but I haven't been buying any more. But if we do break out of this area, I'm more than happy to buy some more shares of Tesla, as that provides confirmation of an uptrend, right? That's something that I talk about within the Push and Profit private group, which if you're interested is going to be the first link in the description down below. But definitely looking to buy some more shares in a long-term portfolio finally after some time. Now, also in the swing trading account, I think we may have a great opportunity here as we push upwards. Now, in the swing trading account, one area that's going to be a bit of a resistance is, again, as we get here to like the halfway 200 mark, where again we have this descending trend line. We have areas over here that provide kind of different resistances. So definitely something that we're going to be wanting to monitor. But at the moment, I'm just patiently waiting, and that's why, I've been looking at other names. That's why for those within the Push and Profit private group, we shared, we have some current swing trade ideas right now, but we shared NVIDIA as a swing trade idea before it bought out or broke out. We also had a recent swing trade with Shopify. We kind of we bought the bounce right over here, rolled it up, and then I believe on the 14th, I made a private video saying, look, it's time to exit out the position. We exited out, and that was a almost 18% gain in a matter of a couple of weeks. So again, if you want to have access to my trade ideas, you like the insights that I provide from a fundamental and technical and macro perspective, it's going to be the first link in the description below. But you guys let me know in the comment section down below, what are your thoughts about Tesla and what you guys see coming in the future? And before you guys go, also, I recommend checking out this next video right over here. Definitely a great video. I break down line charts and how they can be useful to your technical analysis. So definitely check out that video. And with that said, hope you guys have a great day.